Welcome, ladies and gentlemen, to a new edition on Commodity TV of our online interview sessions. And today here with me is Farhad Abasov, the CEO of Millennial Potash. Hey, good morning, Farhad. Very good to see you.
Good morning, Johan. Great to be here and great to see you as usual.
Yeah, thanks for taking the time. And I'm a shareholder of the company. I want to disclose that upfront, of course. And as many of our viewers, of course, know, Farhad, you have been very, very successful in the past. Every company you made, you started, you sold really successfully, and everybody really made money. So I think your track record is absolutely successful. You have done a great job in everything. Now, I couldn't say latest venture because Millennial Potash is already a good time here, but it's amazing what speed you have again, because you just brought out a positive PEA with an after-tax NPV at a 10% discount of over $1.07 billion, and the IRR is at 32.6%. That's for the Banio Potash project. How do you do that? That's amazing.
Thanks, Johan. So, yeah, Johan, the news is absolutely fantastic. I mean, just
Yeah.
really even better than what we expected. And I mean, we didn't know that this project had solid legs when we looked at it, when we did our due diligence. We looked at all the historical work that has been done there. But we did not expect that we would be able to extend the thickness of deposit and that it would be so uniform and continuous and so big. Remember, just based on 2 drill holes, we've already proven 1.7 billion tons.
Mhm.
And this is just less than 5% of our project, and that the PEA comes out with amazing numbers. I think this PEA with over $1 billion of NPV and over 32% of IRR. Remember, this is after tax.
That's after tax
After
even,
tax,
because it was not
exactly.
saying it here.
Yes,
Wow,
and
that's even better.
absolutely, and after tax, and I have to emphasize one thing, Johan, here is that although we calculated with after tax numbers, we came up with after tax NPV and IRR, but in actuality, you can negotiate a tax holiday with the government for the first few years, maybe 4 to 5 years. So
Mhm,
maybe in the beginning of our project, the numbers will be even stronger. But anyway,
mhm,
even as it stands, after tax numbers are amazing. And the reason for that is very simple, Johan. We did really in-depth DD, and the team has done a great job drilling and proving this up. And the reason we have lower capex and lower operating costs is that basically we have solution mining approach, which is very capex friendly, so to speak. It brings
mhm.
your capex significantly lower. And we have very thick potash deposits, which also translate into lower operating costs. And that is the result um, that we see in the news that leads to a very large NPV and very healthy, very robust IRR numbers as well.
Mhm. Okay, super. So, $480 million would be the initial capex estimate, but including $62 million contingency. So, hopefully, we are not expecting or facing that again inflation, because I think that's quite conservative what you have calculated, because those are actual numbers, right?
Absolutely.
So the high prices are already figured in what you need. So this is for 800,000 tons per year, yeah,
Exactly.
of primarily granular K60 muriate of potash. But what does it mean? The estimated $61 per ton. This is like an all-in cost already, or what does that mean?
Operating costs, yes.
Okay, what comes in addition?
So, yeah, Johan, so there's capex. So, in other words, capital requirements
Mhm,
to build the project,
mhm,
and then you have operating costs after you start your project.
mhm,
So $480 million that you mentioned, you're absolutely right, includes 15% of contingencies already in it. So, a very, very conservative number for 800,000 tons. But we've also looked at two smaller scenarios, two
mhm,
smaller production rates, 400,000 tons and 600,000 tons. And of course, if we go for 400,000 tons, that capex goes down to 320 million. But at this point, we think 800,000 tons makes a lot of sense because it puts us on the map because the project can do a lot more than 800,000 tons, for example.
mhm,
And so that will potentially be interesting for some strategic players in the industry. And secondly, we think again that there's enough demand for this 800,000 tons already. We're already in talks with some potential off-takers. They will gladly take 800,000 tons. So that's why we decided to go with 800,000 tons. Now, on $61 per ton, that is one of the lowest operating costs out there,
Hmm.
comparable only with the lowest cost producers currently in the market. And the reason for that is, again, the fact that we're going to be using solution mining and very thick potash horizons. Now, think about it.
Hmm.
We have 70 meters of potash deposit thickness at the thinnest part of the project. In other words, in the north where we've drilled, we got about 70-meter thick potash deposits. As we move to the south, that thickness grows to over 150 meters. So all of these numbers are based on actually the thinnest part of the project, which is 70 meters.
Good.
So even with that, we get $61 per ton, extremely
Hmm.
competitive.
So that means there's a lot of room for improvement on the one hand, but let's talk for the margin for a second. $61, is that then really like the all-in costs, or is there something coming in addition? And what is the sale price? Because I read in your press release that this potash would go completely to Brazil. Is it only designed for Brazil, or could you sell
No,
it everywhere in the world?
no, we can sell it everywhere. So I'll answer the first part of the question. So
Hmm.
$61 is all inclusive. So that's your operating cost at the
Okay.
at the plant gate, and that includes your power costs, natural gas in this case, labor, all the maintenance, everything else. Your drilling costs, because we're in solution mining, we'll be drilling, obviously pumping water into your deposit and so forth. So that is all inclusive. Now, in terms of the product itself, we'll be producing what they call granular MOP, or granular
Hmm.
potash.
Hmm.
MOP stands for muriate of potash, so that's the standard product out there.
Hmm.
About 90% of the potash market is actually is
Hmm.
MOP, or muriate of potash.
Okay.
So we'll be doing granular version of it. So now, although it says to Brazil, Brazil is the largest importer in the world, about 13 million tons a year. We will be actually selling it not only in Brazil, but in Africa and potentially even in Asia. We think that at least half of it can stay in Africa. There is quite a demand, at least a million ton the consumption in Africa last year, and in good years it goes up to about 2 million tons a year.
Hmm.
So we can sell half of that production in Africa. The other half would go to Brazil, other parts. We can even export it to Eastern United States as well because of proximity where we're located. So now the current potash prices actually in Brazil is one of the lowest, frankly, Jochen. So it's about $305 on a spot price basis. In India, China, around the same, 310, 320. But in Eastern U.S. and Western Europe and in Africa, we're talking about above $350 per ton,
Hmm.
even today, which is considered one of the lowest potash price in the last quite a few years now. So when you look at margins, even if we sell it at the current $300, we have very, very healthy margins there because our
Hmm.
cost is $61.
Exactly, yeah, but that's really amazing. There's a lot of room, I would say, even if the prices would fall another
Exactly.
30%, you still make it. That's important, yeah.
Yeah.
Absolutely. That leads to the next question, of course. You will move a lot of material finally. So, what is about infrastructure? I think the state wants to help you with the port of Majumba to make it larger, right? And you want to get also a pipeline and stuff like this, right?
Yeah. So on the infrastructure side, obviously we'll be handling our own infrastructure when the time comes for production, meaning that we'll build our own port loading facilities, storage facility, and of course the processing plant, everything else.
Hmm.
But currently, the government and the government agencies are actually working on building or rebuilding, I should say, so expanding the existing Mayumba port. So they're working on financing, bringing the third parties to actually help them with equipping this port so they can handle resources, iron ore, potash, some other resources as well. So
Hmm.
that's one kind of a project, infrastructure project, or port project that is going on right now. And there's also another party that is building a lagoon port, again, very close to us, that will be able to handle different natural resources, including potash. And we've been in talks with that group as well. And you're absolutely right. We'll build a brine pipeline. Remember, we're doing solution mining, so when we dissolve potash underground, we
Hmm.
pump the brine back up to the surface. So we'll be actually pumping brine, transporting brine all the way to the port, and our processing plant will be located there. So all the infrastructure, meaning natural gas, pipeline, power grid, etc., will be extended to that lagoon port. or of course Mahimba, a port that already has all of that. So that way we'll be able to produce or process our product there at the port site.
Okay. I saw also in your calculation here of the OPEX that diesel was estimated with $1 per liter. I mean, for us here in Switzerland, it looks like extremely on the low side. Is that something which, well, it would not be, let's say, of real influence, even if that would double, right?
Yeah, exactly. Because diesel is not the key component there. The
Mm-hmm.
biggest cost there is natural gas. So the natural gas. Now the good thing is that Gabon itself is both oil and gas
Mm-hmm.
producer. So obviously we'll be sourcing, and they've been already announcements regarding natural gas pipeline, for example. So everything will be sourced internally, so we don't have to import it from anywhere else.
Mm-hmm.
But no, diesel price again. Diesel generators will be used specifically on the well field, for the drill rigs, etc. At the processing plants, storage facilities, etc. Of course, we'll be using power grid as well as natural gas. And natural gas is the biggest, I would say, probably
Mm-hmm.
almost 30%, not 25% of that $61.
Mm-hmm.
So that will be more important than the diesel price.
Okay, good. So then the question is, how long could you operate the project? Meaning, what is the proposed mine life of now? And the other question would be, how do you want to do that? Because I think your company value is like 1% of NPV, which I think is way too low. This is why I'm a shareholder. I think it should be normally between 5 and 10%. So there's a lot of room for upside. But can you give us an idea why that happened? Of course, the coup in Gabon was maybe one of the reasons last year, but this is all solved, right?
Yes, absolutely. Well, the political environment has been, frankly, very stable. In fact, the new government is more supportive of the project. And in general, they're trying to foster a lot of foreign direct investment into Gabon. Look, you're absolutely right. We're trading at 1% of our NPV value. So, which is incredible, and it's ridiculous, frankly. And we think that this is an amazing value right now. So we think that we
Mm-hmm.
will catch up. Obviously, not with 100%, but I think we should be trading at least between 5 and 10% of it
Mm-hmm.
in the next few months if the market actually understands the value here.
Mm-hmm.
And I think it will happen, Johan. You remember with all the previous projects, we also get involved early on, and until if we get traction, this happens.
Mm-hmm.
For us, the most important thing right now is to continue our work. You remember we started with this project last March. In January, we already had made a resource estimate. In April, we have a PEA. So we've been developing in a record time.
Mm-hmm.
Within 12 months, basically, this project now has not only resource, but also very robust economics attached to it. So the next steps for us will be drilling 2 or 3 more holes still in the north, and I think that will allow us to double, if not potentially triple that resource. Again, this is a very small part of the project still, not even touching the southern part, and that will allow us to actually go straight into bankable feasibility study later this year. But
Mm-hmm.
going
Oh,
back to your
already.
question,
Wow.
that even now with 1.7 billion tons, we will be able to operate this project for the next 40, 50 years at 800,000 tons.
Wow.
So obviously, with double or triple the resource, now we're talking, decades and decades of
Mm-hmm.
production at
Exactly.
maybe even higher rate.
Yeah, I mean, you had now a 25-year life of mine, but as you said, you will drill more, and this is only
Exactly.
the smallest portion of the ground. So I think those 25 years
Absolutely.
were very, very conservative.
Yes, yes, absolutely. Now, 25 years, it's specifically,
Yeah.
as you know, for the calculation for the DCF analysis, that's more than enough. Obviously, beyond 25, it has, those numbers will have very little impact on your MPV. But in reality, you're absolutely right. This is a huge
Mm,
project that we'll be able to produce for many decades.
okay, super. Then you said you have the support from the states. Gabon is fine. New government is fine. So those boxes are all checked, I would say. Um, the master question for me as a shareholder is, how many phone calls have you received already? Because there must be, yeah, I could imagine that the Chinese or even also US producers are really looking on something like this because you have all the advantages on your side.
Yeah, we've received quite a few calls already, and not only from strategics, but also from large financing institutions,
Hmm.
because they really, I mean, they've been following the story. They were waiting for the PEA to come out, and
Hmm.
now they've seen the results. They're really impressed. So we are at advanced stage of talks with various parties, specifically for strategic investment at this point. I mean, there are some parties who are interested in M&A, but we think it's a little bit too early for that. As we
No,
discussed,
please
it's
not now.
not at 1% of MPV. Exactly.
We can talk
So,
about a
so
dollar.
we
I'm
have
fine.
to we have to unlock more value, and or the stock price has to really reflect the value of the
Yeah.
project before we talk about it. So at this stage, we're really keen on focused on getting strategic investment into the project, into the company, and I think that will be one of the main or major steps forward, and one of those events that would show to the general market that major parties are actually interested, they're committing to this project, and that will unlock the tremendous value and put their stamp of approval on the project as well. So you remember we've done that in the past with our Millennial Lithium, with Alana
Yes.
Potash, and so forth. We
Yeah.
brought in very large parties to support us, and that's exactly the strategy right now.
Yeah, definitely. And I have a very good feeling that you will be very successful again with that strategy because you've done it many times before.
Thank you, Johan. Yeah, we're pretty
Yeah.
confident that we'll make this project work as well as we've done with the past projects.
Yeah, absolutely. Super. Farhad, thank you very much for the update. Wish you all the best, of course, and please
Thank you,
keep us
Johan.
posted. Yeah, as it looks like you are really again on the right path. And so, from that side, I really hope that we all will benefit again. As I said, I'm a shareholder, and hopefully many others then too in the future. Farhad,
Thanks so
thank you
much,
very
Johan.
much.
Take
Thank you.
care.
Yeah, ladies and gentlemen, that was Farhad Abasov, the CEO of Millennial Potash. Yeah, you heard it. First PEA with phenomenal good numbers, over $1 billion in NPV, over 32.6% IRR after tax, ladies and gentlemen. That's very important. And you also saw the production costs of around $61 per ton. This is also phenomenal low, even if that would rise to $70 or $80 because of some, I don't know, surprises or whatever, that would make really no difference because the selling prices are easily between $300 and $350 per ton MOP. So from that side, this is all in favor of the company. And don't forget, 25 years initial mine life. They can do this for the next 50 years probably. And the payback period is only 1.4 years. So I could imagine that a lot of institutions, a lot of the big boys in the potash scene are having already eyed on the Banio project, meaning on Millennial Potash. And this is one of the reasons why I'm a shareholder. First of all, the project is phenomenal. Secondly, Farhad and the team has done that many times before, and I know they will execute and deliver because they have also their own money in it. So from that side, really check out the company. Maybe make sure you get some shares because I think it will be very lucrative. So thank you very much for watching us, and bye-bye from Switzerland.